and welcome to Islamic Finance Weekly, where we discuss relevant topics around the non-interest finance market. I am Opeyemi Aranseoluwa, and I'm standing in for the anchor, Bukola Akinyele Yusau. So today we'll be talking about fintech, non-interest, and socio-economic developments. This morning I have with me Mr. AbdulAkeem Akinbode, the Deputy Registrar, Institute of Islamic Finance Professionals of Nigeria. He's also the co-founder of Halal Limited. Good morning, Mr. AbdulAkeem.
Good morning.
Thank you for having us.
Yeah, it's my pleasure.
All right. So we go right to the questions.
Okay.
Mr. AbdulAkeem, why is Islamic finance model disruptive in today's world?
That is a very interesting question, and this speaks to the fact that when we look at the global financial system or the global financial industry, we would realize that it is basically depicted by self-interest, and it is also depicted by lack of value in terms of looking at how value are being designed to be achieved. And that's basically, when you look at the conventional financial system, it addresses issues of self-interest. And when you look at comparatively the Islamic financial system, it's basically as its tenets in call it the Islamic belief, which basically guide how businesses are being carried out, and which also speak to the fundamentals of Islamic finance. And that speaks to the various areas around ensuring that Islamic finance or transaction or businesses are conducted around key basic elements, which include morals, which include value, which include etiquette, and also which include sharing of derivatives. And when I say derivative, I mean that whatever it is that the business has come to offer, whether the good or the bad, the Islamic finance tends to ensure that both the financial institution and its object, or call them those that are its clients, they both share both the good and the bad. And when we look into the financial system, the good and the bad, trying to narrow it down, we might just be specifically talking about the profit and loss, where we try to ensure that the profits that are made from engaging in business activities are enjoyed by both partners, whereby both the person financing any business and the person receiving the finance, they both share the profits and the loss, rather than how it is being obtainable in the conventional financial system, where profits is not a function of the third party, it is a function of the financier. And risk is also pushed to the person that is assessing the financial service. So majorly, when we look at the Islamic financial system and how it has been able to provide solutions, alternate solutions that help to break the conventional system, that helps to give opportunities to people, individuals, corporates, the government, other key stakeholders in the economic environments, giving them alternative to how they are able to access financial services. And that's basically look at the value propositions of Islamic financial system.
Venturing into the technology space requires a lot of upscaling. So what are some keys, like some key issues facing the startups in the country?
Okay, thank you for that question. And basically, when we look at the key issues, challenges that are faced by startups, they are not just limited to Nigeria. It is a global phenomenon, and that is because globally there are people that are trying their best to come up with different solutions, around innovation. Some of them are not innovation basically, They are just trying to improve on how processes are being done before and now. And all of these, call them startup, they are all faced by challenges because basically when you look at the resources that are available in the country, specifically in any country, you will realize that in a way to distribute that, it becomes more challenging for startups to be able to access that. When you look at Nigeria, basically, as record has shown that we have about 487 startups. And when you narrow it down to Lagos, we'll be looking at a large amount of about 88.3% of startup staying in Lagos, residing in Lagos. And that speaks to a number of 425 startups, basically, who are largely competing in the innovative ecosystem. And when you now look at all of this, the ripple effect of that is a lot of challenges that face these youths. And when we look at the rough calculation of the population of Nigeria as at last year, we're looking at a roughly 209 million population, which largely are youths. And this is a whole lot for us to dissect in the area of how they are able to assess growth and the challenges that they are facing. So basically, we can want to, on a specific level, we can want to look at the challenges and issues surrounding startup growth, especially in the technological ecosystem. We can look at them from different perspectives. To start with, let's look at the area of government, because everything boils around the government. And that speaks to how the government is able to create enabling environments to assist startup in their iteration stage, in their problem identification, solution provision, piloting, and also having access to regulation that enable them to go out there and test their idea and have support from the government. I want to mention at this point, before now, there has been a lot of challenges, but just to make a reference to the bill that was signed by the president of the country, looking at the national startup bill that was assented by the president just yesterday, 19th of October. And that speaks to a volume of improvements. That does not practically implies that all of these challenges are going to be solved immediately, but it is a way forward. So when we look at this bill, assume it has been into play, say a couple of 2 or 3 or 4 decades ago, you see the ripple effect of that in the startup environment, whereby this bill has been around for several years, and how people will be able to establish their innovation and be able to test and go to the market, and as well have access to several infrastructure that's going to enable them play conveniently. And mentioning the government policy, it will also want to interest you that power, electricity play a huge role in enabling startups, especially in the tech ecosystem, because they leverage basically on their laptop or their phone, at least to get started, and also leveraging on several other infrastructure, but majorly their laptop. When you are a startup and you are coming up with different ideas and trying to innovate, and you have little access to electricity, what comes to mind is how you are able to mitigate that. And how do you mitigate that? By consuming and also producing electricity yourself. That means that you are going to be diverting a huge part of your little funding, if at all you have, you'll be diverting it around getting electricity or having stable power supply in order to enable you work online or enable you carry on with all of these developmental stages. And electricity playing a very big role is part of those major challenges that sets startup. It set them back. It set them backward. Most of them, when they are unable to really find their way around that curve, they end up changing their focus. They end up changing what exactly they want to do. They end up thinking otherwise or thinking of other things that they can do that is not going to give them more challenges. And again, looking at the issue of identity management, issue of how you are able to be secured, even as a tech startup. Some couple of 2 years or 3 years ago, we saw in the country a huge level of insecurity for startups. You see startups who dress and go to their work and all of that being harassed by security agencies, trying to allude them to some level of individuals who are wanted, trying to allude their dressing, maybe through their look, their appearance, the way they are dressed, making it so difficult for them to walk around. And this particularly, it is not just a security threat, it is a threat to the mental being of these people. Because at the end of the day, you ask yourself, I'm just trying to create a digital service, a digital solution. And here I am trying to move around and get busted by a security operative asking me, can I check your phone? Can I check your laptop? Who have you called? And all of that. That is a big challenge, because it creates a challenge that eventually leads startups to thinking or disembarking from their goal. And again, when you look at access to funding, it is not a news that basically financial houses find it difficult to provide access to funding for startups, basically because of issue around how they are able to recruit the funding that they've given them, and how they are able to trace, and how they are able to ensure that such money is well utilized. So rather than giving startup fund to test an idea, they'll rather prefer to give it to the big players in the industry who they can leverage on their brand image. Even though those ones don't have the money at the moment, they can leverage on their brand image, they can leverage on a lot of achievement that those ones have, and even their partners. But who is ready to stick out his neck for a startup? So that brings you back to the problem of how you are able to manage funding to keep you alive, to keep your growth going. And again, startup themselves, they also have problems that can be attributed to themselves. Part of it is financial management. How are they able to have a structure that is put in place to help them manage flow of income? How are they able to manage funding that they've gotten, whether through angel investors or through capitalists or people who feel that, okay, this is a good one, I want to invest, I want to stake so percentage in terms of thousand or million in your project. How are they putting that money into use? And this is not far-fetched. It is not just for startup, it is even a big phenomenon, whereby you see organizations that are tagged big fintech are unable to manage finances, either due to wrong prioritization of need or through trying to create a perception that is not available through the media or through advertising agency, thereby creating issue of financial management.
There's a new development in digital assets. A company named Mohaba Network in Australia launched the first Halal decentralized exchange for physical commodities like physical gold and silver-backed tokens to investors and Muslim communities around the world to promote participation in finance. So as a Sharia fintech expert, share with us what Nigeria can drive from the Halal decentralized exchange.
Okay, I think the development is not a new one, and because we have not just Mohaba playing in that space, we have other players, including Sovereign also playing and also providing similar solution. And just to correct this, I'm not an Islamic fintech expert. I am also a reader, I'm a learner, and I'm also a researcher in this growing industry. So I'm just going to speak based on how far I have read and how far I have researched around the subject. So trying to narrow it down, it is a question that is dual-faced. The first phase is looking at the legality of cryptocurrency or digital financial services or Bitcoin or all other, you may call it digital financial asset or the likes, the legality in Nigeria. So you would recall that a few years ago, I think last year, 2021, I think, there is the ban by the federal government on banks to offer cryptocurrency services. And this speaks to how you can foster this kind of service in the Nigeria industry. And you also want to look back to what are the regulations that allow for you creating that kind of service. And looking at the regulation and looking at how the government is able to provide support and guideline for this kind of service to be able to come to stay. So you want to look at that in the first phase. If the legal framework is allowing the transaction or the business in cryptocurrency, and having looked at that, you now look again on the second layer. The second layer happens to be the Sharia compliance. Is cryptocurrency, is it Sharia compliant? Decentralized finance, is it compliant in terms of Sharia rulings? So these are two areas that you want to first of all look at before you can now look at how we can, as an industry stakeholder, all players coming together to see how we can also create similar products. And what has Mohaba, what have they done? What they've done basically is to look at how they can leverage on expertise of people from different countries, looking at how they can annex that expertise to create a solution. Of course, there are debates around whether cryptocurrency is permissible or is not permissible, it is Sharia compliant, it is ethical or non-ethical. There are different schools of thought on that, even when you narrow it down to Sharia compliance or being Sharia compliant or not. So some school of thought are of the fact that they are of the opinion that it is not permissible because it is not conspicuous in terms of how the operations are run. It is not how they are run, and it is not clear. There are a lot of unclarity in how the transactions are done. So if they are unclear, leave it. Trying to leverage on the hadith that say that inna la halal bayyin wa inna la haram bayyin wa bainahuma umurun mustabihat, saying that what is halal, what is permissible, it is on one side, it is clear. What is not permissible, haram, it is on another side, it is clear. And wa bainahuma umurun mustabihat, that within both sides of the divide, the permissibility and the unpermissibility, within or in between them is umurum mustabihat, what is unclear, what you can't say that this is what is happening, this is the process, this is the underlying asset, this is how it is being channeled, these are the parties to this is the legality in terms of government support. If you are not clear on that, it is unclear. Just leave that unclear activities. Don't go into it at all. So those school of thought say that we don't know what infrastructure they are using, even if they tell us. We don't know who are the identity behind that infrastructure. They can tell us that, okay, this is Mr. A, this is Mr. B, but do we have a clear, tangible information as to this is how it is operated, this is where the funds are being channeled? So if that is not clear, leave it aside. So some believe that cryptocurrency, digitalized finance, Bitcoin, they are uncertainty. It is not clear, so we should leave it. Some are of the opinion that, hey, can we check for that? Can we ask if this operation is violating any Sharia rules? If it is violating any Sharia rules, then we leave it. But if it is clear that it is not violating any Sharia rule, of course, we can go ahead, because after all, Sharia is about ease, is about making things easy for people. And innovation is here to help us to make things easy. Technology basically is not a function of software in all. It is about how we have been able to create solutions that make life easy for us.
So looking at the Islamic Fintech in Africa, the report shows that 42% of the African population is Muslim and 50% don't have access to the branch network. So what can be done to boost financial inclusion, especially for those in the rural areas?
Okay, so financial inclusion is a global topic, because it is not just a problem for Nigeria, or it is not just for the non-interest industry. It's a function even the conventional, even at the world level. The World Bank also creates a lot of paperwork, a lot of prototype around financial inclusion, because they understand that largely there are still a lot of people who are still yet to be on the radar of finance, and that is subject to a lot of conversation. And you want to ask, why are these people not financially included? If you want to know why they are not financially included, it boils down to several factors. Some of them based on belief, some of them based on trust, some of them based on lack of accessibility. When you look at the geographical landscape of Nigeria economically, you realize that apart from Lagos being the financial hub, you also want to look at some other states like Port Harcourt, like Oyo State, very few pockets of places. Others are basically depleted financially. And why is that? Because a lot of centralization is within the urban centers. Because all of the financial organizations or institutions will also want to look at the cost of going to the interior or going to the grassroots to provide these services. What is the cost? So rather than going deep down there, they will want to just center around where they can leverage on government facilities around electricity, security, other infrastructures. So in order to be able to find a clear solution around mitigating the issue of financial inclusion, there's a lot to be done around creating agent networking or agent banking. And in order to do that, the Islamic faith, as a case study, has created a lot of associations, a lot of organizations who are well structured. So this is a clue for non-interest organizations to tap into. All of these Islamic organizations, associations, name them, they have a well-structured system where you can have a database of how many of them are in social location, how many branches do they have, how many units do they have, who are their members. There's need to leverage on that, because that is going to help. It's just going to mean that you are going to empower an individual in a cluster, and that individual is able to provide that financial services to all other members of the cluster in that specific area. So there is need for agents networking, whereby through their agents, because these people, apart from the fact that they take spiritual guidance from their leaders, they also obey them. When their leaders tell them that, oh, this is where we are going, they go there. So far it is not going to lead to any chaos or something. They support, they go. So leveraging on this structure can also help to improve the gap or to reduce the gap in the inclusion space. And apart from that is the fact that there's need for advocacy, there's need for awareness creation. Let financial inclusion topics be discussed among all of these clusters. Let their leader tailor conversation around how they can be financially included. Let them see the need and benefits in including them in the financial system. And when we see part of the effort that has been made by the federal government around capturing the identity of people, trying to put a penalty to if you are not captured, your SIM will be blocked and all of that. That's front and back has been able to improve the number of people captured in that regard. And when you look at that, it means that there are ways that one can also leverage in order to include these people financially if we really want to make a meaningful impact. So looking at what technology stands to offer and how that offering can be leveraged by the non-interest stakeholders, stakeholders speaking largely about all players in the non-interest industry, you want to look at how fintech can be leveraged, technology can be leveraged in order to help penetration, help in deepening accessibility. When you look at the statistics of how many, say for example, non-interest bank we have in Nigeria, we have just, we have the fully licensed one, Ajayi's, Taj Bank and Lotus Bank, and we have other ones having window, the likes of Sterling Alternative, we have SunTrust. So that is just in the bank. For a population of 209 million and counting, according to the Worldometer, the population as at today, 20th of October, it is 217 million. That is leveraging on the national data, on the global data of population. So just 5 to help in providing non-interest financial banking for that population, that is not scalable. So it is about leveraging on fintech. And how do you leverage on fintech? Fintech help you to work across border. Because if you are giving, let's say you are giving a regional license to operate, for example, it means that your operation is restricted. Now look at if you are giving a license to operate as a window license, it means that your operation is restricted to a particular location. So how do you now want to reach out to a lot of people? So it is only by leveraging on technology, fintech, trying to leverage on how you are able to create value by leveraging on collaborating with all these startups who have different solutions that speaks to platforms that help people access several Islamic or several non-interest product and services, whether it is banking, whether it is the takafu, which is the insurance, whether it is the non-interest assets management product or investment product, where fintech provide that platform. And that platform allows for everybody, irrespective of whether you are in Lagos, you are in Kaduna, you are in Calabar, you are in Sokoto, you are able to leverage on that. So there's need for stakeholders, for the organizations, those that are licensed, that are full company, to leverage on all of this fintech. They are numbered, there are not so many. And that is part of what Halal Vest is doing, trying to create a digital platform that enables users, irrespective of their client, to be able to access, whether it is banking, you are able to go through the app, open a non-interest bank, irrespective of your location, without going to their physical structure. Access asset management product or investment product, you are able to access it from there through our partners. You are able to access takafu product, whether you want to access Halal takafu or no takafu, excuse me. So that is a platform that help aggregate all of these non-interest financial services, and people are able to. The ripple effect of that is that the bank that has one license can sit down in his region and people will get onboarded from different locations. A takafu company, an insurance company, will be able to stay in his location, whether it is in Lagos or it is in Calabar, and people that are in Benue are able to access their policy. And an investment A Sharia-compliant investment organization can also sit down in Lagos or in Victoria Island, and people that are in Abuja are able to access it. So that is the power in leveraging on fintech. So there is a lot of this to happen, and there is a lot of this should also happen, where stakeholders are able to collaborate with fintech in order to allow for deepening of their product accessibility and also enabling people to have access to their product without going to their location.
So as the Deputy Registrar for the Institute of Islamic Finance Professionals in Nigeria, how is the IIFP supporting the growth of the Islamic Fintech ecosystem in the country?
I think that question is a very important one, and trying to also assess how is the Institute as well contributing to the development and the progress of the fintech ecosystem. And basically that speaks to majorly several activities that the Institute has embarked upon in order to enhance and also project the fintech ecosystem and product, services, activities. And I want to mention a few of them when we look at the Islamic Finance Advocacy Project of the Institute, which is tailored around trying to create awareness about the activities in the Islamic finance. It is not just narrowed to fintech, but majorly all aspects of Islamic finance. People are not aware. A vast number of people don't know what non-interest or Islamic banking is about. A lot of people don't know that there even exists Islamic bank or Islamic or alternative products or services, financial services that can help their business activities. They are not aware. So this is a very huge and important project of the Institute in trying to move from state to state, trying to create awareness through training, through symposium, and also by partnering with other players in the industry. We try to ensure that we, from time to time, organize events or training that are aimed and channeled towards creating awareness and also exposing people to the opportunities in Islamic finance. Apart from that is the fact that the Institute has developed a product called the Certified Islamic Fintech Professional, which is a certificate product training that helps to give more credibility to people that are practicing in the Islamic fintech industry, whereby they are able to boost their professional career and they are able to also create more credence about what they do, to say that, oh, this is what I am doing and this is a certificate to back that up. In doing this, we have carried out a lot of training for individuals, even for corporates who will want to train their conventional staff in the area of the Islamic fintech. So these are trainings that we have carried out, and we are also moving from time to time to look and as well assess the regulatory edifice to see what are the new policies that are on ground on regulation that people should be aware of, not just the general public, but also players in that industry who may not be aware. For example, some people are not aware that there's a new startup bill that was released yesterday. So people need to be aware. So the Institute carried out a lot of advocacy projects and also trying to create a lot of training modules in order to educate people in this area.
So finally, what is the outlook for the Islamic fintech industry in Nigeria?
Okay, so when we try to examine what the outlook for the Islamic fintech is going to, the landscape, the progress is going to look like going forward, we would want to make reference to the Global Islamic Fintech Report of 2021, which tried to evaluate all fintech activities, not just fintech, Islamic fintech activities globally, looking at the OIC and also looking at other players that are offering that service. Basically, as of 2021, the growth of the Islamic fintech industry globally was capped at $49 billion, and that speaks to contribution from several countries. And countries that I'm talking about is basically narrowed around about 64 countries where Nigeria sits at the number 22. And we have Malaysia sitting at number 1 at about staggering 87% in terms of their rating, and Nigeria sitting at 32.6%. And you also want to look at Nigeria being at that position, number 22. And that happens to be the first African country in that rating. Other African countries come lower down behind Nigeria, and we are at 32.6%. So it means that there's room for a lot of improvement, and there's room for a lot of development in this ecosystem. And when we look at a lot of activities that are being put in place, also trying to look forward to how penetration can be achieved, how new products can come about, and how innovative products can also happen. So looking at all of this, there is a vast opportunity for people in the Islamic finance industry. So it's just a call. I understand that we have the NIFIAN, which is an association of non-interest financial organization in Nigeria, basically trying to look at how they can come together. I think the association needs to do a lot more in areas of trying to collaborate in terms of taking projects, in terms of investment and structural development, and how they are also going to create products around agricultural intervention. Nothing stops them from doing all of this. It is not just about other things. It's about how you are going to leverage on your strengths. And also from the institute ends as a professional organization, how they are also able to help them create this information linkage between the end user and also those that are providing that solution, how people are aware of all of this. And that is what you are also doing in order to ensure that there is this advocacy, stakeholders coming together to create this solution. Thank you very much.
Thank you, Mr. AbdulAkeem. Thanks for joining us on the show.
Thank you very much for having me.
Have a nice day.
And you too.
So that will be all for today's edition of Islamic Finance Weekly. You can log on to our website www.proshare.co to watch our videos, read our stories and reports. To come your way next time, thank you for watching and have a lovely day.